One of the best performing stocks since the election, if not the best individual name. It's certainly got to be up there as Tesla. It's a fractional loser today. Price target gets bumped to right where it is now, 480 at Baird. They say buy any pullbacks. You agree with that?
I agree, especially above 400, above that previous high, buy any pullbacks. Now, we have owned this. It's really one of our top second half of the year plays, and really leaning into it at $200. Trimmed it at 350. We've been letting it run. It's astonishing to see it really break out. But you know, you're buying a seat close to Trump, obviously with Elon Musk here and owning this name, the favorable regulations that are going to come with it, the autonomous vehicles investment, the AI investment. But there's also, we can't ignore the flows. There is some craze in the market right now, meme stock craze, whether it's quantum, whether it's Bitcoin, whether it's Tesla making a move. The option flows, the money being owned, retail investors here, they're also driving it. Just notice some technical barriers, and for us, out above 400, you got to let this thing run.
Joe, Uber. It seems like these stocks just trade off one another. Yep. Uber's up 3.5% today. Bernstein, though, moves it down its preference list. They say the stock's oversold, but they've cooled on the bull case for now. What do you think?
Well, I think the analyst price target is a little bit too high. The 12-month price target is $91. What's interesting about that is in October, Uber was $87. That's the price of Uber. At the time, the 12-month price target was $86. Subsequent to that, Uber's price has now fallen, and the price target is actually going higher. So the analyst community remains overwhelmingly bullish on Uber. There's not very much that's going to fundamentally act as a catalyst until earnings are reported in February in the stock. So I think the stock is kind of vulnerable to positioning from the perspective of everyone is bullish the stock. But on the downside, I think there's a put underneath the market because this company is fundamentally a strong company that has focused on profitability. And I think what that leads you to is a period from now until February where the stock is just going to vacillate on either side of $65.
You worried about your position here?
I think profitability is key here, and that's why we still love the name. But I want to get technical for a second. There's a trend line going back to October. It's holding the $63 area on a weekly level. I think if it could respond that, we may be adding more. I just don't want to pick the bottom here in this type of week, but let's not also ignore the Waymo headwinds. And it's been a bit of a paired trade against Tesla. When Tesla was falling, Uber was rallying. So I think there's definitely some headwinds here, watching the $63 level on a closing basis.
Citizens Financial got upgraded today. Over at Raymond James, price target's $55. You have this in the team.
Yeah, I did. Look, you know, we've got about 8 regional banks in the strategy. Citizens Financial is one of the better performing ones. Regions Financial, Fifth Third, Huntington Bank, they all now have negative momentum. Bank of New York, M&T, Cincinnati Financial, they maintain positive momentum. And a lot of the analyst community coming around and saying, okay, buy the pullback. That's built upon the premise that in 2025, the regional banking community is going to get significant regulatory relief. And that, in fact, might happen. I'm not calling that into question. The other tailwind that's being presented for 2025 is that credit conditions are going to continue to improve, such as they have had and supported the rally in the first half of 2024. So I think what's happening now is 24 was an environment where all the regional boats lifted at one time. I think it's going to become very idiosyncratic as you move towards 2025. You're going to have to generate alpha in the industry and mine from the bottom up to try and find who the winners are going to be. I think Citizens Financial can be one of those.
Weiss, Netflix has been a monster. Yeah. The target at Morgan Stanley today goes to $1,050 from $830.
It's the only pure play. It's one of the only plays that's working. Their content is tremendous, and they've added sports. So there's no reason why it shouldn't keep going. Now, Disney says, hey, you know, this password sharing isn't working for us either. So now you got to make a choice. Do you add another family member or somebody who's been sharing your password to Disney, or do you go to Netflix? You're going to go to Netflix. So to me, it keeps going. And, you know, unlike some of the others, where you sort of talk about the momentum to justify the way, way, way overvaluation, and to me, that's a Tesla. No way should you pay a multiple for a car company like this. It's And that's what's endemic with the market, by the way. Sidetrack for a second, is that we seek to justify the momentum and the dollars going into these stocks with fundamentals and ignoring the valuation. Those fundamentals don't exist in any of those stocks, Tesla in particular, because as good as it is, as close as it is to Trump, are you really paying 200 times for a capital-intensive company and 100 times EBITDA? It's lunacy, So if you're a technical trader, that's fine. It still makes sense.
If you're thinking of it as primarily
an
auto company.
Sorry?
If you're thinking of it as primarily an auto company, which is where you're talking about it being so capital intensive.
Even as an energy company. They've done okay in the energy business. What other energy company are you paying that for? It's still capital intensive, period. And it's still a multiple. It's unsustainable.
What do you see when you look at Netflix, Shan?
I think from my vantage point, if you think about the amount of capital that Netflix had to put into building their subscriber network, and you think about when they did that, they did it when, essentially cash was free. And so I think that, from a streaming competitiveness perspective, I don't see any real contender to take their spot at the top over the next 3 or 4 years.